the closing beat, everybody. Happy Thursday. How we doing out there? Hope you had a good day. Last day of the month. That's it. It's over. It's April. It's time for May. The whole talk of the April or sell in May and go away thing. Anyways, we're financial advisors here at Jazz Wealth. We cover the stock markets, let you know how things are going out there. We do that for our customers as well as those of you that like to follow along. But every Thursday night, tonight included, we have a class just for customers. And this one tonight's going to be unique. We're going to go over the stock market performance during the 1918 flu pandemic and go over all that sort of cool stuff to see how things may be similar to what's going on now or different. I don't know. Could be totally different. You'll have to see. Anyways, that'll be tonight at 8 o'clock in the dojo. You just log into the dojo, and of course, you'll be able to see everything pop up live. We'll do that there. Jazz Artist of the Week is Pat Metheny, and we're going to go with the whole album today, actually. The Way Up. You know, it's one of his older albums. Well, not older, but The Way Up is the album there. Good album. Anyways, let's take a look here for the stock market today. You got minus 338 on the Dow. A little bit of a pullback today, huh? S&P down 27.25 on the NASDAQ as well. Well, let's take a look and see what we've got here, because you've got the S&P after gaining over 60% of the or recovering over 60% of the virus downturn there. It's actually sold off just a little bit, maybe a little end-of-month profit taking, like we said. We're going into May. We're historically going into what's supposed to be like a slower time of the year, getting there. So it could be a little bit of a profit taking in the short term. For the day, you had the NASDAQ was actually held up the best out of all of them on the day. The Russell 2000 was the weakest overall. That ends its 6-day streak. Remember, yesterday we said it had a 6-day streak of gains of over 1%. That ties it for its all-time record there. So that comes to an end there. It's going to be no new record for the Russell because that fell quite a bit today, actually. Still, actually, the 5th best month on record for the Russell 2000. We'll take a look. There's your chart for the day. Everybody's looking at the S&P 500 going, oh, let's see, what was the month and everything. But the Russell had a good month, so I just thought I'd point that out. It's something you're not going to see everywhere. The light blue, or whatever color you see on your screen, is the 5th line down. That is the final performance for the month of April. 13.83%. You can see that ranks the 5th best month, 1982, 14%. And the best on record was February of 2000. Right? We talked about that. That was up 16%. And then you can see the rest of them there if you're curious and just like looking around a little bit, see some of the data. We put that together for you there. So what happened basically? Well, the stock markets were mostly higher. I just watch all the time. Stock markets were mostly higher slightly until Europe opened last night. And Europe opened, and remember, they've got earnings going on too. So if you take a look at earnings out there over in Europe, you got Lloyd's of London, Societe Generale, or General, depends on what part of America you're from, I guess. Shell and BASF all had disappointing earnings, or they cut their dividend, like Shell cut their dividends, if you're curious. Shell Corporation, the gas company. So they cut their dividend there, and that really started sending the markets lower throughout the evening there. And then today we get initial jobless claims, we get consumer spending, all of those very poor, not looking very good. Initial jobless claims down 3.8%. Now we have lost that'd be over 30 million jobs in the last 6 weeks. That's a record. That doesn't happen, right? So now we've lost even more than all of the jobs combined since we got out of the last crisis that we went through, the financial crisis there. Anyways, so let's take a look. We'll look at the stock markets here for the month. This is super cool if you ask me because, what was it, 3 weeks ago, our class on Thursday night for customers was, hey, let's average out every single day in the stock market. And let's actually take the month of April, let's take every April 1st and average the performance, right? Just put it together as a composite. Every April 1st, every April 2nd, every April 3rd, every April 4th, and plot that on a chart. And then what we did is we plotted April up to date, what was happening, identical. Like April has this historical movement that it just kind of always follows. Well, anyways, the short story is, if you saw that in the dojo there, that's it. That's exactly what it looks like. So April performed this month for the S&P 500 pretty much like it does on average for every other month if you break down that month in composite. So I'm going to share that in our notes from Jazz email this weekend because it's a cool data point there. Anyways, you can look at the NASDAQ up 15%. The Russell was the best performing index of the month until the last little second there. It started selling off there, well, obviously today, meaning the last second. The S&P added 12%, the Dow adding basically 11% on the month there. So you can see S&P coming in third place, NASDAQ Tech stocks had a good month there. Nothing to complain about there. So there you have it. That's where we end up the month of April. I would consider ourselves still in that chop zone overall for the S&P 500, so something to consider there. Our FinTips video yesterday was on which stocks could outperform the markets and why. Not an opinion, but from a data perspective. And then on Outside the Virus today, we actually covered energy stocks. Which ones to buy and why? Why would you focus on those? What categories should you look at? So if you're interested in that, we put that together there for you. Let's go over the sectors here because the sectors didn't look too good today. We don't have to spend a lot of time on the bad stuff because you're not going to like what you see. Overall sector performance, I'll go into the different industries as well just to really zoom in. Regional banks down 4% on the day. Home builders down 4%, still above the 50-day moving average. Semiconductors were weak all day and held us back there. OIH, this is your, oops, nope, there you go. Recently reverse split OIH, pulled back just a little bit there. Okay, yeah, sorry. Looking around, you got retail pulling back. That had a great week over the last 5 days, so for that to pull back, not a big deal there. You got basic materials on the day. There you go. Basic materials were your worst performing sector on the day there. You got transports down 3% as well, all pulling back from respectable bounces. I keep saying that. Man. Come on. Utilities, the only one that wasn't able to get above the 50-day and has been weaker over the past couple days overall. You look at the price of oil. Oil had a 22% pop today off the lows, looking pretty sweet there. And again, I'll cover this maybe for the next couple days, but then we're going to move on, right? If you're playing the USO, you don't play the USO anymore if you want a pure oil play. It's fine if you believe oil's going up and you want a nice diverse mix of different oil futures contracts and everything for the long term maybe, but if you're thinking, hey, I think oil is going to bounce and I don't have the ability to go buy oil futures contracts, or I don't want to, or maybe that's, I don't know, whatever you do, you can't use USO. It is no longer a pure play oil play. So if you're wondering today, why did oil go up 22% and USO only went up like about 6%? That's not right. It used to be more of a one-for-one. Well, they just totally took a hammer to their business model and changed everything. It will no longer be moving like that unless they change their minds and put it back. I guess they can, but they totally, I mean, I got to imagine lawsuits there because they totally changed their entire model. It is no longer a pure play on oil. Just keep that in mind. It's a horrible choice for a pure play on oil, should you be looking that way. All right, that's all we got for sectors and looking around there. Let's take a look at Zoom. Zoom finished the day down 7.75%. We talked about this on Outside the Virus. Fudged the numbers a little bit. Nothing fraudulent. I'm not saying that. But instead of saying they had 300 million users, like they said before, they clarified that and they said we had 300 million meeting participants, meaning they weren't necessarily signed up for the service, paying for the service, using the free service. They were just there at a meeting that somebody invited them to. Big difference, right? So if you take a look at the stock, let's go back just over the last couple days here. From highs down to lows, you've got a 25% pullback on your Zoom. Yikes, right? That's a tough one. All right, looking forward here, we got Boeing. So Boeing had a 1.45% on the day. They're going to sell $25 billion worth of bonds in a 7-part series. It's not very exciting, but they're going to sell it in a 7-part series. And they said that they had enough interest where they could have sold $75, almost $80 billion in bonds. That's how many people wanted to buy bonds in Boeing. So was that you guys? Were you guys out there looking through, trying to get a part of this here? Moving on, we got Humana trading at new highs today, or at least it popped up to new highs. That was one of your new 52-week highs. And you had Amazon as well. However, earnings after hours is going to pull Amazon down about $123. That's about 5%, trading at $23.50. So if I go to the charts, that erases all of today and a little bit, most of yesterday, actually. New lows, yeah, there was only one, CINF. Only new low on the day. It's been really rough over there. It's a financial company not doing well. Boeing was also downgraded on the day as well. Downgraded by S&P. So I should say their credit rating was downgraded. They weren't downgraded by an analyst. Whole different thing there. A couple other things. You got Dunkin' Brands down 2.8% on the day. They reported earnings, but they cut their dividend. I think I said that yesterday as well. Tesla, we talked about their earnings yesterday. It's lost 2.3% on the day. And Elon Musk is quite upset about people not being able to go back to work. Which side do you land on? Twitter down 7% on the day. They missed on earnings by 12 cents. We covered that. They took away their guidance as well. Not the same story for them as some of the other social platforms there. Looking around, we talked about Amazon being lower. Where they've got earnings that came out. Missed on earnings, beat on revenue. They used to miss on earnings all the time. It wasn't really like a big deal, but they missed on revenue. Costs more to handle more customers, doesn't it? They've got a lot more customers. They've got more people that need to work there because of the shutdown. And so they're finding that they have to spend money on this. And Jeff Bezos said, look, we're going to spend everything on this. We're not going to hold back. We're going to grow and be ridiculous about our growth. So hang on. I believe his actual words were hang on, or sit down and hang on, or something like that in the earnings announcement. Okay, you've got Visa down, only about 1% after hours here. Visa came out with earnings. They beat on earnings, beat on revenue, withdrew their guidance going forward. Basically a flat earnings at the moment. And the one everybody's looking at is Apple. So it gained 2% on the day, but after hours it's down 1.5% at the moment, trading at $289. There you go, almost reversing all of today's gains. Apple, a lot of things going on with Apple. So beat on earnings, beat on revenue, 17% increase in services. That's a increasing portion of their business that they really wanted to increase. So looks like that's going well. This is one of the first companies that raised their share buyback. There's been a lot of share buybacks that have been cut, or they're just no longer doing it. Apple says, you know what? We were buying back shares. We're going to buy back even more because they've got $192 billion in the bank, like not being used at the moment. $192 billion. They also raised their dividend 6% to 82 cents, so they didn't cut their dividend, and that's their justification for saying we can buy back shares. We don't need assistance. We don't need to cut our dividend. We're going to go ahead and buy back our shares, so take that. For your 401ks out there, here you go. A little bit of a change in what we've been seeing. You've got over here on the left. Yeah, you can see the cursor. On the left-hand side, value stocks saw some profit taking there as well, but most importantly, bottom row, you've got all the small caps weak on the day, and we showed that earlier with the Russell 2000 being a bit weak. It's profit taking. You have people had a sizable 14% gain in just the last 4 days. You're going to have some people that decide, I'm going to take some profits at the end of the month there. So that's what you have there. We'll get that out of your way. Okay, earnings. Let's do this, and then I'll take your questions. Earnings. You got AbbVie coming out tomorrow. Charter, Colgate, Clorox, CVX coming out. Dish, Estee Lauder, Honeywell. What else? Johnson Controls. There's a lot more in here. Newell, ExxonMobil, X-Ray. That would be probably the bulk of what you're going to see tomorrow. It's Friday, so all these companies will report in the morning. There'll be no after-hours earnings tomorrow. Friday afternoons, usually you don't see that until you get to the later part of earnings season, if you care. Dividends. Texas Instruments is paying out 90 cents. Citigroup paying out 51 cents as well. And today's the day. Zoom takes its place in the NASDAQ 100. So there you have it. I'll take a chance here and try to answer some of your questions, and that's basically it. And get ready for our class tonight. More of the geeky stuff that you guys love. Hope you grab a drink. Come join us if you're one of our customers. If not, what are you doing? Right? What are you doing? Come on over. Come join us. Anyways, I love it. I love it. Yeah, you would, if you use the old school approach, so the comment was on Starbucks, just busy as can be. If you use that old school approach of just going around and looking at the Starbucks and then making an investment decision off of that, I could see a lot of people wanting to buy Starbucks because all of them buy my house, and on the way to it, yeah, the lines are backed up. That's pretty impressive. And by the way, did you see Disney is going to actually have taped lines 6 feet apart for, for the ride queues, right? Because I don't think they're going to have their digital queue thing ready. So 6 feet apart. Could you imagine? Like they're just going to be all over the park, 6 feet apart. And all their cast members have to wear masks and everything. They had a whole list. It's great. I won't bore you with it. What do you think of XLE? Best performing ETF, best performing sector, I should say, on the month there. I don't know what the question is, but if you have it, you're happy with it. Nothing to do about it today. It did really well, and it's done well for the month as well. You'd have to ask the attorneys on Luckin because that's tough. That's a tough one. Yeah, it will open again, but where it opens is a guess. I wouldn't know. Yep. golf courses tease at certain someone's hearts. Our golf courses are open. It's pretty much, I'm fascinated. Every morning I get up, I don't know if you care, but every morning I get up and I sit outside and I could look over the golf course. And the people that are just going, they're just walking. I'm like, there's so many people playing golf, but I guess if they're locked down and they're like working, then they're probably out golfing. But our golf courses are and have been open. I know that's not true for every state. If history repeats itself and the second wave of the virus hits us similar to the Spanish flu, how big of a drop do you expect the markets to go? That would be a total guess. I could only really rely on the data from the last time we saw this, which is before anyone here watching and this platform even existed. So we'll cover that tonight, but other than like in this market, I have some ideas, but I don't think there's any way that someone could say how that would happen. Because even if another wave of viruses, the virus hits, what happens? Did the economy shut down? Did it partially shut down? Did everybody figure out how to work from home anyways and it didn't really matter? So that's a tough one. That would be a guess. Great, even if Mickey has to wear a mask. Yeah, can you imagine like Buzz Lightyear with his big old mask on? They should do it. I know they're selling masks. I think they've got like 1 million masks that they're selling, Disney-inspired masks, and then obviously they're donating the money. Yeah. What do you think about the Boeing credit rating cut? Well, it doesn't matter what I think. If you look at the bond purchasers that are looking to buy the $25 billion, which can be anybody, by the way, they don't care. So you take the masses of people that are willing to pay or it's willing to buy these $25 billion in bonds, and if you saw the demand that there was, you'd go, well, people don't care. Doesn't matter. In terms of should you buy it or not. I don't know if that was the question. Yep. That's funny. We did the Apple Amazon earnings. Yep, that'll be in there. Mm-hmm. And Apple currently trading only down 1.6%, Amazon down 5.4%, so down a little bit further for each one of them. Yep. How would you invest your stimulus check to get a quick 50%? Maybe like loan sharking or something? To get it, like pretend you're the mob and loan it to somebody and then rough them up to get paid? I don't know. Eric, how you been, man? I love it. Any chance that, well, Norda, so if you look, let's put it up. So if you look at stocks like these, you know, I know you have a habit of doing this, but you never want to buy these on this kind of an extended move. Look what happens when a stock gets extended that far away from its 20-period moving average. Very simple explanation. It always pulls back, always pulls back. Look back over here. Got too far, always pulls back. Granted, if I zoomed in, now you see the size of that move, so it's being crunched down because of what just happened. But look what just happened here. We got too far, we pulled back. We went too far, we started to pull back. So your mentality for this stock is, if I'm interested in buying it, just for whatever reason, then I want to do it somewhere around the green line that's on the screen. That's a super elementary way to explain it, but it's actually really, useful because you can see it happen over and over again. So will it bounce again one day? Yeah, I don't know that this company is going bankrupt or anything. It should be fine. But from here, that's the tough one. You say, I don't think I want to buy it here because we know what happens time after time after time again. And that's not opinion. That's obviously, what you can see on the charts. So keep an eye on that. That's what I would say. Yep. You got it. Yeah, McDonald's a little lower today. Missed on earnings by 8 cents. Revenues came in a little bit better than expected. They cut the breakfast all day here. So I don't even want to talk about it. You're going to cut my breakfast all day. It was bad enough that they it was hard to get breakfast all day, and the guy would always be like, please pull forward. It's like 4 o'clock in the afternoon. Stimulus roulette on black. That's a better idea than what mine was. Mine talked about roughing somebody up. I guess that's probably better. Yep. Oh, boy. All right. We'll maybe take a look at a few other questions here and then move on. Citrix did well today. Not really a lot of news, just a strong stock that held up through the highs there and continues to hold up. Obviously, it's one of the better performing stocks of the year. If you were to look at all those stocks, I believe I probably could tell you real quick. It's not doing it. Sorry. I thought I could just give you a quick stat. Oh, maybe I could do it. Nope. Nope. I see a lot of price targets here. It is one of the top 7 stocks of the year, though, actually, in terms of performance. I can't get it to organize. Got to up my game, man. Always trying to do that. Cool. All right, I'll get out of the way before the politics questions start. So you guys enjoy the rest of your day. Thanks for stopping by. If you're one of our customers tonight, remember Spanish flu. We're going to cover that and maybe some other stuff as well. Depends on how much I get ahead here. And I'll see you guys later. Enjoy the rest of your day. If you're not one of us here at Jazz Wealth, and thank you so much for watching. Adios.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.